Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today's guests are Dr. Milan Somberg. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
Great to have you as always. Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. It's great to be here.
Yes, likewise. And Irene Parker, please welcome to the show.
Hello, thank you, Sasha.
It's always a pleasure to have you. And so today's Wednesday. Market is positive, as usual on Wednesdays, except when it's not up. But most of the days, Wednesdays are up days. And so we are 1 week away from the earnings of Nvidia. This is by far more important than whatever Jerome Powell is going to say on Friday and many other events. This is something what will validate all the tech rally, what's happened in the last several months. And as you know, the Magnificent Seven, with the exception perhaps of Tesla, but then you can add, instead of Tesla, say maybe Broadcom or maybe some other stocks. You will see that this seven stock greatly outperformed S&P 500, the other 493 stocks, as it's a different universe. It's a different stock market. It's a different players. It's all different. So there are players who are locked into S&P 500. Thank you, Milan, for representing these people. And there are people who are involved in Magnificent Seven, and there is one person, being myself, who involved in Magnificent One, which is okay. So that's where we are, and I would like to start with you, Irene. What your style of investing and how you're playing out in the present situation?
Well, I've been retired as a stockbroker since 2001. My husband and I both retired at age 50. I can't take total credit for that because we owned a pharmaceutical bioavailability laboratory where generics would test trade name drugs. So in the stock market, I was kind of the go-to for pharmaceutical and biotech stocks. And I had plenty of positions as a stockbroker. I know Milan is of the belief that no one needs help, that everyone should just go on their own. But about, I'd say 70 to 80% of the population do need help. One example, University of Hawaii, their retirement system had 5 options and 12 sub-options. It was the most complicated thing you could ever understand. So I studied it like I was working on a PhD and got to know that those options and sub-options. And then they had deferred comp on top of the 403B. Then you have all these 403B options. People need help. So more millionaires were created by maxing out their retirement plans, I feel, than in my business, than picking the right stock. So a lot of people would have never saved if I didn't beat them up and make them give me 5%, 10%, hopefully 15% of their money. And it's not about just buying a stock, buying a mutual fund. It's about the big picture. And I always say that death and HOAs bring out the worst in people. So I had 5 estate planning attorneys that would refer to me because sometimes if there's a life insurance policy, the answer is not to buy stocks or bonds with it, but it's to pay down the mortgage on your home. So I would focus on the big picture.
Very, very wise approach, what you just described. And Milan, what you're doing these days? What's exciting and interesting?
Well, I'm doing as I always have done. I buy the American market as a whole, as represented by SPY. SPY is an exchange-traded fund which tracks the S&P 500. And the S&P 500 are a fairly good representation of the American market as a whole. The American market as a whole has been the strongest investment in over 100 years, close to 200 years, unless you cherry pick. You know that you can buy a violin bow today for $100,000 that you could have bought 10 or 15 years for a quarter of that price. It's been a better investment than the stock market. So that's called cherry picking. And if you don't pick, then buying the American market as a whole is the simplest way to go. It takes no time at all. Now, stockbrokers, Irene, can collectively, not individually, but collectively as a group, they can equal the S&P 500. They cannot collectively outperform it. They cannot collectively underperform it. As a group, they're going to equal it.
I disagree.
As a group, collectively, they can overperform the American market or underperform.
Yes, I'm very confident of that, and was part of the reasons why my husband and I were able to retire at 50.
You did something very wise to be able to retire at 50. And brokers, the main service that they can offer to investors is hand-holding. A lot of people need hand-holding. And so that's what you can do. But beating the market as a whole, all brokers put together can only equal it. They cannot outperform it. They cannot underperform it. Now,
I disagree. The reason I disagree. Go ahead. Go ahead. You finish, and then I'll explain.
Well, I'll say this: when you are right, I agree with you. But when you are wrong, I cannot. Now, go ahead and disagree with me.
Okay. I calculated returns. It's been 20 years since I retired. My husband retired in 1991. So what I would do is I was a binge investor. And I said this on it when I was on the show the prior time. The reason I like American funds, last week I talked about how Peter Lynch was such a rock star in managing money, and you bet the farm on his expertise, and because he makes so much money, he doesn't have to work that long. And then the person that comes after him is not the person that he was. The reason I liked American funds is, number one, it was a team approach to management. They were consistently on the Forbes top 10 performing mutual fund list. The other thing is that people, buying the S&P 500, those are stocks. But, you have the bond market and the stock market and the allocations that need to be made. And so if I put everyone on a letter of intent, it lowered the 5.75% sales charge to about 2.5%. So my husband way before I was a stockbroker, made the first investment 30, 40 years ago with American funds, and he might have paid even 5% commission. And we're still pulling money off of that fund where it doubled and we pulled it off, and it doubled and it pulled it off. And they also have the lowest annual maintenance, whatever those fees, but the name escapes me for those annual fees. James would know what
Management fee.
Yeah, the management fee. Thank you, Sasha. So people would give me $100,000 and I would invest $25,000 today. And then I would say, you may not hear from me for a month, a year. But when something and I learned the first day in the market, 1987, I could have been wrong, but I felt that the reason the market went down wasn't justified. So I just pounded out. They were called pink tickets back then. It was so long ago. You had to write the pink tickets, and I don't know what were the buy tickets and sell tickets, but I just pounded it out all day. So then when something crazy would happen in the market and the market would be down 1,000 or 5,000 points, I would just pound out orders all day. So typically I could look at my returns and they were better than what the American funds are.
So Irene, for everybody who does better, there's someone who doesn't do as well. Are you telling me that as a group, collectively, everybody can do better than the market?
Only my clients.
Exactly. There you go. As a group, collectively as a group, it's a mathematical certainty that all brokers will equal the market. They cannot overperform it. They cannot underperform it. They can equal it. Absolutely. A mathematical certainty. Now,
I'm sorry to hear that.
But brokers need to buy groceries and pay the rent. So they need to get paid.
And so do Schwab brokers.
Oh, exactly. Everybody who is in the business needs to buy groceries and pay their rent, so that your fees have to come off that U.S. Market, which is represented by the S&P 500. Absolutely. So the best service that you can offer your clients is hand-holding, and you can outperform the market too, but there's going to be somebody who underperforms it because it's a mathematical certainty that as a group you can equal it. Can't do better.
May I
Can't.
interject something? In my younger days, I've dealt with stockbrokers. And I had a public company at that time, and I had to communicate with a lot of brokers and so on. Now, you cannot really treat them as a class or a group because they are so different. Their investment styles are so different, and their clients are very different. And I've learned quite a lot of things from stockbrokers. For example, when I started at first by penny stock traded on Vancouver Stock Exchange at 50 cents, the broker who was highly recommended to me, I even remember her name, Lisa Applegass. Her father was very, very big dealer on the penny stocks at the time. So she didn't want to buy that stock for me. And I asked her, here is the money, please buy it. I'll have to look for somebody else. It was going on for 2 weeks, and finally she said, okay, I'll buy it for you, but remember that you will lose all this money and I will not be able to help you, all that stuff. Okay, she bought the stock. It went up to 75 cents and it went up to $120.25. I kept buying, so with all money that I had available at that time to me, I was just kept buying and buying and buying that stock.
As the stock went up, you can buy it.
Yeah, then stock went up to $1.80. And she told me that now she put all her clients into that stock. So she was reluctant to put me in at 50 cents, and yet she was putting everybody else at $1.80. And I asked her, what's the logic behind it? She said at 50 cents, it was a pure gamble. It was a known quality. It was so many questions. Now at $1.80 and news releases that I read or so on, that represent a different quality. It doesn't matter that it's $1.80. It could be $2.80 and $3.80 as well. Actually, stock went very shortly after that. It went to $4.75. So all her clients, of course, meant money. I had a friend of mine who was very reluctant to buy that stock at 50 cents or $1. Doesn't matter what. He was just adamant that he's not going to buy it. And his explanation was very interesting. He said that you understand that the joy of making $1,000 cannot be compared to a sorrow and a tragedy of me even losing even $100. You see, therefore, for me, it's a losing game. So I'll win $1,000. Okay, $1,000, that's great. But if I will lose $100, I will cry. I will be in despair for the next several months. So therefore, this is not for me. But anyway, his wife had some influence over him. So eventually, he decided to buy stock at $4.20. And then that made me worried because I understood that the stock cannot go higher forever. And I decided to play a game with myself. Would I buy this stock at $4.20? Sure enough, I made a call to my broker and say, buy me another 2,000 shares. She said, it's $4.20. Just buy 2,000 shares. Thank you. So I bought for 20. Now, of course, it's a game because my average was $1.45. So to me, to buy two, and I had hundreds of thousands of shares at the time. So to me, to buy another 2,000 at 420, it was like a meaningless transaction. But still, I wanted to make sure that my friend will not be sort of left alone hanging out there. So anyway, he didn't make any money because stock went down after the stock market crash in '87. It went down to 350, but at 350 he was hanging in for almost a year. He sold it at 375. He lost a little bit of money, but that's the story. So all stockbrokers, they cannot be viewed as kind of a class or a group or anything like that. They're all very different. They have different results. The only one thing is, Milan, what I can say in defense of your theory is that all what investor wants to do is to buy SPY. In this case, that investor doesn't need stockbrokers simply because he just in 1 second he will execute the trade and that's the end of story. But even that involves much more than just push the button and buy the stocks. It's management of the trade, it's a consideration of allocation. There are a lot of things to do. So stockbrokers, at least the best stockbrokers, they are very good allies, especially for somebody who doesn't have
No,
self-confidence.
that's true, Sasha. That's true. There are those.
And I would just like to say that I have an MBA. I have a certified financial planning certificate. I still have a stockbroker, and we're doing some estate planning things. My stockbroker is an attorney, and he referred me to the CPA, and the CPA referred me to the real estate attorney. And if I wanted to buy a stock, I have just credited the success my husband and I have been blessed with the professionals that we've paid, whether it be attorneys or CPAs. You can do your own taxes. I would never want to do my own taxes. So this is America. And maybe other countries don't feel this way, but we have freedom of choice. So there are people in this world that really want to have someone to help them, and there are people that don't need any help, and I have no problems with people that don't need any help.
Irene,
Excellent.
you're right. We need help with so many issues. We need help with insurance. We need help with estate planning. We need help with a long list of issues. But I'm talking here about money management. I'm talking about simply investing, not insurance.
But you're talking about a very narrow aspect of the total portfolio.
Of course, yeah. And for every stockbroker who does well, there are stockbrokers that don't, because, like I said earlier, it's a mathematical certainty that collectively, as a group, investing only, we're not talking about life insurance, we're not talking about estate planning, we're not talking about anything else, just investing as a group, all investors, not just stockbrokers, all investors, collectively speaking, will equal the S&P 500. For everyone who does well, somebody will do badly. Now, why would you argue with somebody like David Svensson, who said asset allocation is the most important aspect of investing? Picking
Jim,
stock.
what do you think about asset allocation theory, and how is your experience with stockbrokers?
Are you asking Irene or me?
No, I'm asking Jim.
Yeah, go ahead.
Yeah, well, fascinating conversation, and I have a lot of opinions, of course. But as far as the asset allocation is concerned, one of the things that I did recently was sell some stock because it had gone up. And when we talk about, Irene was talking about when the stock was going up, trimming, and then you see it go up again and trimming some again. And so that's what I'm doing, because if we take a look at the year-to-date performance of the market, it's been fantastic. So I have seen my allocation. My cash is now a smaller percentage than when I started the year, my cash allocation. And so now I sold some stocks so that I have more cash. So now if I'm positioning myself so that if there is some sort of correction, I'm going to pounce. And I'm going to pounce on certain stocks, and I am going to cherry pick, as if I use Milan's term. And I'm still in the AI sector, still have my eyes wide open on that. In Nvidia, they're going to report earnings, and we're talking earnings that are $20 billion, and they might be 30 billion when they announce. It's astounding. It's amazing. And you can say it's overpriced or whatever, but the fact is I pay attention to revenue. And if they have a lot of revenue and the prospects for the future revenue are still strong, there's no other way to look at it. So
yeah, it's not just revenue; it's a growth of revenue.
Yeah. From 20 billion to 30 billion. Are you kidding me? These are mind-blowing numbers.
It's true that a trend is much more likely to continue than it is to reverse itself.
Right.
But
Trend is your friend.
Trend is your friend until it isn't. However, you also pay attention to the factors that might shift and might change. And so then you can say, well, maybe the revenue will change, because of X or because of Y. But I see no signs. I don't see an X or an Y out there. I don't see anything on the immediate horizon.
Is the market currently overpriced generally?
Well, there's a great argument for that. Sasha, go ahead.
Well, it all depends on earnings. It all depends on interest rates. These two factors really will determine whether it's overpriced or not. And it's very difficult to say that the market is overpriced or underpriced. The market is what it is at this given moment. So if the market is at this given moment is say S&P 5,000 or Dow Jones 40,000, that's where the market is. And the market is always right. It doesn't matter what you think, whether it's overpriced or underpriced. It's absolutely irrelevant. Now, let's talk about a little bit details. So modern investing, we discuss your portfolio being separated in two classes. Yep. One is your
core portfolio.
Core portfolio, which represents, in some cases, 90% of all your assets. Some cases it could be 70% or whatever. It might be a variable. And the 10%, it represents a fund portfolio. A fund portfolio where you can buy riskier assets, where you can afford, in some cases, not very often happen, but it could be that you can lose all your 10%. So your 90%, if they most likely will make up 10% profit, right. So you will be still in play. You're still in a game. Mind you, in my situation, because of Nvidia, my fund portfolio grew to astronomical numbers like 300% a year, 400% a year. And I spent now much more time to manage this so-called fund portfolio, because although I already took all my money out, so I'm playing with so-called house money, but it doesn't matter. It's still my money, and I'm not going to give it so easily back to the market. That's not going to happen. So I had to came up with the strategies to protect my gains, but also to be aggressive enough to use situation like with Nvidia, with coming earnings. So how I mitigate it? For example, I have now 3,500 shares of Nvidia. So what I did, I locked in gains on 2,000 shares. I sold March 125 calls. My average price $120 for Nvidia stock. So 125, I got incredible premium for that, about $20 for each call I sold. So figure out how much is that. And so therefore, of course, I limit now my gains on that stock, because most likely by March, I expect it to be at least $150 or probably more. So I will still make profit on that trade. I will still make money, $5 on each 100 shares, on each share, sorry. And I will make the $20, which is $2,000 on each and every call that I sold, which is $40,000. Okay, so there is still something is on the table for me. But the remaining 1,500 shares, I hedged a couple of times. Actually, the last time I did it today when the stock went up to 129, I sold January 125 calls, and when the stock went down, I bought them back. I made about $800 profit on that trade. But first of all, I was able to defend my position. I didn't really want to sell it. So I protected my position. I still have 1,500 shares unencumbered, so to speak. And waiting until maybe tomorrow it will go up to. See, there is one psychological barrier. Everybody is talking about, including Investors Business Daily, that 135 is, and the final resistance point is 140. And they recommend actually start buying Nvidia when it will cross 140. So for them, $141 buy is better than to buy today at 127 something. Okay, that's Investor Business Daily, and I already quoted their approach that
Yeah,
they
you see the logic behind it. Yes.
that when it going higher, you
Then the
buy
threshold.
more. If it
Yeah.
goes lower, 7% or more, you sell it. Okay,
Okay.
so
Now-
this is how I manage this trade. I'm looking forward to earnings. I still think that they will have spectacular earnings. The only problem
I think
with
so too.
earnings is that in some categories, some critics could note that this particular category didn't do as well as we predicted. So therefore, although other departments did very, very well, but that one didn't do so well. So there could be all kind of discussions and so on. So even with spectacular earnings, believe it or not, Nvidia can go down. I still think that this is possible scenario. So I'm playing both sides. I'm not committed 100% to that, but I am committed.
Okay, let's take a look at the price earnings ratio of a stock.
Yeah.
Price is what you pay, earnings is what you get. If the price earnings ratio of a stock is high, it's uninteresting. You wouldn't be interested in a stock with a high earnings ratio.
Except biotechnology. You made more gains on stocks that had massive losses than you could on the best value stock. What percentage do you feel, Sasha, you are as a technical investor watching stock charts compared to a value investor?
You ask
Very
me-
good question.
I
Like
think.
all of you.
Well, yeah.
Okay, go ahead.
Well,
I am not a technical investor.
okay. Back to price earning ratio. Let's say most of the time, if the price is too high for the earnings, it's something that we would ignore. The Buffett ratio, Warren Buffett's ratio, takes the price of the entire U.S. market, and the earnings would be the gross national product. That's the Buffett ratio. It's highly respected, and it's never been higher. The market is greatly overpriced, but it is true that trend will continue, more likely than it is to reverse itself, but sooner or later it will reverse itself. That's a historical fact.
Yeah,
Sooner or later we will all die. And I don't think you will argue with me on that.
the gold will remain the same.
Milan, I would agree with you that this theory, price per earnings ratio, is applicable to a certain stocks like Procter and Gamble, for example, or Coca-Cola, or some other stocks. It is not applicable to stocks like Nvidia simply because their earnings are going, they're such powered ahead, and they're so significant that whatever price per earning ratio today looks like expensive, and it's not even that expensive, it's only 40. And if they will have spectacular report, it will go down to
Where
32.
it doesn't apply is any technological change. If we're
Yes.
talking about high-tech stocks, if we're talking about
Yeah.
biotech stocks, we're talking about things that with revolutionary technological change. The stock will be always overpriced for the price earnings ratio until it isn't, until it starts to soar. And so when it starts to soar, you want to be on the train. And
Or it's like a pharmaceutical stock where you're betting on the future earnings of
Exactly.
something that's in development.
and
Exactly.
you have high confidence that it's going to be okayed and it's going to be valued and have customers, and their future revenue will be there. And you've analyzed it and you decided that this is a drug or whatever that's going to be effective. It's going to be approved and effective and desired in the community at large. And therefore, this stock, the earnings are going to go up, and the earnings are going to be significant enough for the stock to price to go up quite a bit. So the price earnings ratio is not a guide in a case like that, but it is a
Burroughs Welcome. When I took a position in Burroughs Welcome before AZ.
Oops.
Here. Well, my
But for
theory,
Sasha was talking about stocks that it is a valid thing. So you have to
Yes.
be wise. You have to be if you're going to use technical indicators, you have to apply them appropriately.
Now, why would you argue with somebody like David Svensson, who has brought the Yale Endowment Fund to the greatest performance of all the endowment funds in the United States, who says that picking stocks and timing markets works in the short term, but not in the long term. And
What? Very quick question. Which year Svensson wrote that? What year now?
he maintained that constantly. He died recently, but he maintained that constantly. And
When he first said that, do you remember?
no, I don't remember when he
Well,
first.
I think the point that Sasha's making is that technological change has accelerated in recent times. And so what we're calling a stock market that is overvalued, actually it's reflective of the economy. And it's reflective of what people are going to, they put some percentage of they're not going to make, with, inflation is going to go up and all of prices are going to continue to rise. My dad could raise a family of 4, own a home and have 2 cars on a school teacher's salary in the 60s. That's not possible now. So people are going to want to get income, and they're going to find that in the market, primarily in the market. That's their best bet. And so this is a counter argument to the idea that it's overpriced. It's not overpriced if people are going to continue to invest in it. And people are going to continue to invest in, to the best of my knowledge. I don't see
it's just harder to pick stocks in a higher market, but you can still pick them.
Yes.
Yes, agree.
Like I said earlier, picking stocks and timing markets does in the short run.
We have a question. Mark, can you pull that question back up? Thank you. Would interest rates in cuts in September lead to more liquidity in the market? Traditionally, that's been true. However, in this case, we've been talking about this, Milan, for a while. Has it already been factored into the market?
Yeah.
And I don't know if that's true, because we've been talking about interest rate cuts every quarter, every time they meet, and I don't know if it's factored in anymore. I can't answer that question, but the market will respond positively to an interest rate cut. I can say.
Except one thing: if 25 points was already factored into the price of the market, and now they're waiting for could be 50 points cut. So if it's not going to be 50 points cut, only 25, market actually can go down.
Well, but it won't be 50. It'll be 25. And I think they're late on the 25.
So therefore, there is a case for 50. But again, we'll see it in September. But it seems to me that Magnificent Seven, including Nvidia, they live a life of their own. The stocks like Nvidia, like Meta, like Google, they don't
care.
And they did 25 or 50 or so on. They don't depend on all that.
Well, the high interest rates are
dollars.
They're stopping the startups. You're absolutely right, Sasha, but they stop startups from starting up and competing and lowering prices. So the
quick question for
artificially high has been damaging to the economy.
That's true.
Quick question for you folks and everything, because I was just wondering, because I think I mentioned to one of our founders on the network, but there was a company that had suffered, and it's actually, I think, a West Coast company, Jim, but apparently they have bounced back. So I was wondering what y'all's thoughts were around Netflix. It is an entertainment company, and apparently they have bounced back and all along those lines. So is that something that folks should be investing in? Because as I know, I think not Jim, but Nick and Kim have interviewed the founder of Netflix way back when they were first starting this network and everything. But what is y'all's thoughts? Because apparently they are having a boost in their profit margin.
If you're going to invest in Netflix, it should be done in your fund portfolio. 3 things about a fund portfolio I keep saying. 1 is nobody needs one. 2 is always make sure that it's small enough so that if you lose it all, you don't change your lifestyle. And 3 is don't keep records, because you will be disappointed. Yeah. Your fund portfolio will not.
I can disagree with you very strongly. But
point number 3, that I can argue with too. However, making valid points, it should be only discretionary funds that goes into it. And you don't want to be selling stocks to pay groceries or rent. There's no question about that. And, as far as Netflix is concerned, I'm going to say I'm a user. I watch Netflix, and I've taken peeks at it, but it's beyond my area of expertise. So I don't like, I thought like Disney has all this quantity of quality and quantity. streaming material. And so why isn't Disney doing better?
I'll tell you why. Because Disney using their 100 years old library, so you will see one movie at a time, then another one, then you see this movie one more time, then another one more time, then 5 more times, and another 10 more times, and then you get sick and tired of it. The
So they
Netflix,
haven't figured out the streaming strategy,
they
and
have no.
Netflix has.
This is but comparing to Netflix, it's typical garbage. Netflix comes with their own production, and
Yes.
some of them are the highest quality possible. And every week I'm getting emails from Netflix. I'm using Netflix. Every time it's new documentary, new movie, new series,
Yeah,
something.
yeah.
They're doing fantastic jobs. The subscribing base is growing, and they started advertising. They're now an advertising-driven company as well.
Right.
So I think Netflix is a buy, it's a screaming buy, by the way. I don't have it. Once after earnings of Nvidia, it depends which way it will go, I could become buyer of Netflix, by the way.
Uh-huh.
I'd like to make a comment about pharmaceuticals, which Irene mentioned earlier. The first drug that was created in a laboratory was aspirin by Bayer in the late 19th century. And they created something wonderful. That they continue to take most of our pharmaceuticals come from plants. And so Bayer continued to do that, and the pharmaceutical industry was seen as something that was better for the world. However, they have become evil. I am on a drug. I happen to be on a drug which in Canada costs me dispensing fees of $12, and which in the United States costs $32,000 a month.
What?
Hello?
Well, I will confess we made our money on salicylic acid. My husband did the studies, the original studies for SmithKline, and yeah, that's true. And it's not fair, but it is what it was. So we took it.
Your money.
Irene, did you make any money off of BC? Because BC is actually founded here in North Carolina, BC powder and everything along those lines. So did you make any money off of BC and all in that space?
BC, what is BC?
It's a headache medicine.
Well, that one, yeah, I'm not familiar with that one, but you have to when you have the generics and the trade name drugs, you have to really watch the generics because they will bet the whole farm on something. And for every day we were late, it would cost the big companies $1 million a day. It was much more stressful than being a stockbroker.
And I'm
But
not sure BC is still around, but it was founded in that same time as Bayer. So it was one of the early aspirin pioneers. And like I said, it was literally founded here in Durham, North Carolina, where I'm based at and everything. By the way, I just wanted to tell all of you and everything, because apparently this gentleman, so you'll be glad to know, is a new listener. So he was asking questions and he made that comment. But Pastor Tanks, we have not seen before. So Pastor Tanks apparently likes your show, Sasha. So he's asked a couple of questions. So apparently he's watching and maybe he'll continue watching. But I have no idea who Pastor Tanks is, but he's coming in from YouTube.
Okay, fair enough.
Well, and also there's a book called Plant Paradox. So many of the plants can do beneficial things for us and others can do very harmful things. So, this is the kind of thing where you use experience, and I use this as an investment strategy. The other investment strategy I think I share with Irene was Marrywell. Yeah, my wife got had a lot of Xilinx stock, which got transferred to ADM stock. So we own more ADM stock than I know what to do with. And at first I was not happy with it, but it's starting to come back quite a bit. So now I'm singing the praises of Advanced Micro Devices. And one of the reasons is they have pivoted and they're now into AI, and they have positioned themselves very well. So I think as well as Nvidia, AMD is another stock to take a.
And I think AMD will have its Nvidia moment. I don't know when, but it's due. It's never had that, but I think in time, and maybe even sooner than I think, it will have Nvidia's spotlight in time. Really, about the pharmaceuticals, I sometimes let's see, if I sold something and I don't know what to do with the money, I buy one of two stocks, either Pfizer or AbbVie. They're all paying dividends, and well, in my opinion, you have to be rewarded by holding stock, either through dividends or through selling covered calls. Because if you are just holding stock and you are not being paid for that, you're taking all the risk in the world of holding the stock and nobody pays you for that. It's not with me.
Well, and
love that
Pfizer is more of a marketing company than an actual manufacturer of drugs. But I will like to say that my husband, who thought the show was over, is 86 and he will not take any prescribed medicine, despite us making our living
Right.
in doing bioavailability studies.
Oh,
He's an
He
expert
knows how
on
the
natural
sausage is
medicines.
Listen, I'm not recommending neither medicine for you to take. What I'm saying, I saw some potential in stock and its dividends and so on, but now I don't have any of those. So I made some money, but again, I'm not knowledgeable in this area at all.
Yeah, I
And,
think that's my key.
but I think there are opportunities, but again, you have to be so deeply involved in it and understand it. And I don't think that I'm on that level. So if I will have some extra money, I will probably go for Nvdia. Although it went up quite a bit in the last few months, so it's now expensive stock, but still it pays good dividends. And Pfizer is going through the wall of worry, but I think in the next 2 months it will go
I want
higher.
to mention something about dividends. You're very interested in dividends paying stocks, as are most investors. And there's a group of stocks called dividend aristocrats.
Yes.
Dividend aristocrats have been paying an increasing dividend every year for more than 20 years. And of the stocks that are traded on the New York Stock Exchange, about 5,000 of them, there will be a dozen or so dividend aristocrats. There are portfolios made up entirely of dividend aristocrats. They have done half as well as holding SPY. Yeah.
But stocks that pay good dividends are still useful for some investors,
Yeah.
because it takes the worry away. And dividends, especially if you're using it for income, that's
True. When I was in practice, I had several ladies, older ladies whose husband had passed away and left them with a large portfolio paying dividends. They didn't even know what was in the portfolio. All they wanted is the cash that came in every month.
Right.
Yeah.
Yeah.
That worked for them. Yeah.
Well, again, just a couple of words about core portfolio, so-called, what we discussed. There are two approaches, at least two. Milan's approach is to buy SPY and hold it there and display with allocation and sell in appropriate time and buy in appropriate time or so on. That's fine. My approach is highly paid dividends stocks. And even some of them could be thin stocks like Altria, for example. GDV by Gabelli funds is I like Gabelli stock simply because it pays dividends every month. So that would be the last ones that I will liquidate because it's nice to have dividends every month. And so this is how I balance to have more or less predictable, highly paid dividend stocks.
Yeah.
And but I don't trade this core portfolio. I just don't trade. I don't sell covered calls. I don't have margin. I think they didn't touch that for last several years.
That's the right way to go about it. Warren Buffett, that I mentioned earlier, highly respected, made more than 90% annually for over 60 years. His favorite holding period is forever.
Yeah,
So-
our core portfolio has done fantastic. So, I wouldn't want to touch it just because I might mess it up, And so I have a fund portfolio because I'm interested in stocks. I like tracking them. I like figuring out what's going to pop next. And, that's entertainment to me. So if you are entertained by doing these things, why wouldn't you do it?
Of course.
Yeah.
And what I say about Warren Buffett, he just recently left $6 billion on the table by selling Apple stock. If he would work in
Apple stock has been impressive.
average mutual fund or ETF or anywhere, he would be fired in 15 and a half minutes. Just
know,
take all your stuff and get out of here.
It's what have you done for me lately?
I mentioned
You
earlier,
left $6 billion on the table. Out. You're fired.
Warren Buffett is 94 years old, I think, and many decisions now are made by the
Of course.
person who is likely to succeed him, which is a guy called Greg Abel. And Greg Abel is, as it happens, he's a Canadian and he plays hockey every day. Many decisions now are not made by Warren Buffett; they're made by Greg Abel and perhaps other people like that. So,
Or
Yeah, it's
maybe he should
delegated by him,
continue
yeah.
to play hockey. Maybe he can sign for NHL. And
Well, if someone's going to play hockey every day, I'm not going to tell him he's a bad investor.
Okay, what can I say? Ladies and gentlemen, it was a great show today. Thank you so
you.
much for
Thank you, Sash.
participating. Have a successful week of trading. Have a great weekend and see you same place, same time next week.
good
Bye
to
bye,
see
everybody.
you.
Thank
Nice to
you.
see you both
Thank you.
all again. Bye-bye.
Bye-bye.
Bye bye.